Well, let's speak to Marshall Gittler, Head of Investment Research at FXPRIMUS in Cyprus. A pleasure to talk to you this morning. It's looking like a strong growth in US jobs market, but wages are weak at best, aren't they? I mean, what's the likely reaction going to be, do you think, from the Federal Reserve regarding its next rate hike, do you think?
Well, I think you're absolutely right to focus on wages. In Chair Yellen's recent speech, she didn't put that much emphasis on the labor market. Everybody knows that the labor market is very healthy. What they want to see is higher inflation, because they have this dual mandate. They're required to have full employment and steady inflation. They haven't been getting the inflation side right yet, and everyone believes that that requires higher wages. But wage growth is not accelerating at all, even as more and more people get jobs. So I think that really is the key to look at this non-farm payrolls, not necessarily the payrolls, but the average wage growth.
Well, the number crunchers tell us, Marshall, that you need wage growth of around 3.5% in the US to lift inflation to the target rate of 2%. We're a long way away from that, aren't we? How difficult will it be to achieve that, and can it be done in the coming months?
Yes, it's a very good question. Actually, there's a debate going on among economists. Do higher wages cause higher inflation, or does higher inflation cause higher wages? It may be that people don't really demand that much of a wage increase if inflation is low. So which is the chicken and which is the egg? We really don't know here. But meanwhile, with the inflation rate steady, and still a pool of people who want to work at current wages, I don't see that much acceleration in wages coming, and therefore I don't think at least people will be predicting that much higher inflation. So I think it could be some time before they feel ready for the next step up in interest rates.
And Marshall, how much global economic development is going to temper Federal Reserve thinking?
Very much. That's a good point. In Chair Yellen's speech recently, she mentioned the word global 10 times and the phrase global economic and financial developments 3 times. It seems that she's really taking on the role of central bank to the world. And as long as the world remains shaky, they're going to have a hard time raising rates and therefore perhaps upsetting the global apple cart. But right now, things are improving around the world. Emerging markets, stock markets are doing much better. The Chinese stock market is stabilized. The yuan has actually strengthened a bit. So if things and volatility has come down a lot. So if things continue as they are, I think in a couple of months they might be ready to raise rates one more notch.
Okay, Marshall Gittler at FXPRIMUS, thank you very much.